Good morning, trading world. It is January 31st, 2022, 8:24 a.m. and this is my pre-market outlook and technical analysis for day trading the SPY. Today's title for the outlook is Overextended but Not Over. All right. If you've been listening to my outlooks, you know I like to use analogies to explain how I look at technical analysis and the market. I often compare the market to a person running a marathon, and your bounded oscillator is pretty much a reference for the track or course that the market is running. Now, in a marathon, you have planned rest or water breaks, usually at the halfway mark. And what's going on, or what I believe to be happening right now, is that on the weekly time frame, we passed that halfway break or water break mark without taking that break. And like a runner, the next marker or water break area is too far to run before getting that break. So it looks like we're going to have to go back to the halfway mark in order to get that water break and rest. Now, remember, the rest or water break for the market takes the form of consolidation. So in my opinion, it looks like the weekly time frame is going into the consolidation period to build up energy for another long run in the future. Now, when it comes to cycling between time frames, think of the time frames as individual runners in a team relay race, and each cycle is a lap in that relay race. Smaller time frames have to run more. So in a normal cycle, an hour time frame would have to run 4 laps before passing the baton to the 4-hour time frame, and so on. Sometimes the baton is dropped, and the prior time frame has to run back to pick up the baton to pass it to the next time frame. So putting all the analogies together, it's quite possible we could spend the next month consolidating on the weekly time frame, going back to the halfway mark for that water break. While consolidation happens, we will witness a series of semi-cycles on the lower time frames. The lower time frames dropping that baton and having to go back to pick it up over and over again where they left off. So if the lows that we've experienced, the 427 through 420 area, if they hold, this is what I believe to be is happening. We'll go right back. Let's take a look at that weekly time frame. And I'm not sure what you use, what indicator you use, but the RSI is a bounded oscillator. By oscillator, we mean it travels back and forth between these 2 points. And by bounded, mean it's a fixed point, like a circle. It goes between 100 and 0. That's what I mean by bounded. Your MACD is an oscillator, but it's an unbounded oscillator. So it doesn't have a fixed point that it travels back and forth to and through like the RSI. So this is why we use things or bounded oscillators to track the course of our runner. So, like I said, the halfway point here is this white line, and it looks like we're going to go back and try to hang out around this halfway mark. And while we're at this halfway mark, we're going to see consolidation for the next month on this weekly time frame. Now, going back, let's take a look at the key levels to watch for today. All right, here we have the key levels for today, starting with resistance. Jack resistance is going to be the 442 through 443 area. We have Queen resistance as the 445 through 447 area, and King resistance as 450 through 453 area. Going to the support side, the support decision areas, Jack support is going to be 438 through 437 area. Then we have the Queen support, which is going to be the 435 through 433 area. And then we have King support at 431 through 428 area. Also, since we've rallied back up, we've actually come out of the lower channel. We've moved back up. The current channel we are in, the major channel, is between 453, that's the top, all the way down to 425. That's the bottom of the major channel. Now, minor, based on the 4-hour time frame, the minor channel is between 443 all the way down to 431. So keep in mind, those are the channels that we're playing in. Let's get to scenarios for the day. All right, here we go with scenario number 1, which is going to be a range day type structure. We could look to set a decision area or upper boundary around the Jack or Queen resistance area before chopping lower, and then possibly another try pushing boundaries before trying to rally again. So, as you know, with range days, there are so many different variations, so there's nothing that says we have to start going up and run into resistance first. We could actually come down, hit support first. Like I say, we could come down, hit support first, then go back up and come down and do something like that. You have to keep an open mind when dealing with range day scenarios, because there are so many different variations that could take shape. So that is scenario number 1. Let's move to the next. All right, scenario number 2, we have a trend day down type structure. And on trend days, we look to open with a gap. And on the trend day down, that gap should be toward the downside. And usually what happens is at the open, we try, there's an attempt at closing the gap, or a small relief rally, at an attempt of closing that gap and we usually find resistance on or before the previous close, which would be 441.95, which is represented by the blue line. It's possible we could chop around this 441.95 for a little bit today, because there's a decent amount of order flow there before reversing and going into a downtrend for the morning. That downtrend will take up pretty much most of the first half of the day, kind of willowing out at either the queen or king support areas. And usually there about midday we'll see a sideways chop through the lunch hour, and the second half of the day will begin with a try to continue the main trend from the morning, which usually turns out to be a head fake, and we'll usually get a small attempt or a relief rally going into the close on a downtrend day. So that's the next probable scenario to look forward to today. And let's go to the last. All right, scenario number 3 is what we call a rounded reversal day type structure. We could get a continued takeoff toward the queen or king support area. And that trend will pretty much start immediately from the open. And we'll continue down until we reach support, which will usually be found around midday. And we'll have that same sideways chop during the midday. However, it's key to watch divergence, whether it's volume, whether it's indicator, whether it's internals. But that should key you in as the price action is sharply down here. There should be a divergence in the indicators that you're watching here, or volume. And that will signal that after the midday chop, we could possibly see a rebound, usually met with the same energy as the trend in the morning. So those are the scenarios for today. Like I said, I wouldn't be surprised if, even though this week, looking further ahead, I have a bearish connotation for the week. And all that bearish connotation says is that in order to be bearish for this week, all we have to do is close below 441.95. And in some ways, I'm having a little technical difficulties because I had a connotation for intraday today, but in trying to go back and verify it, it seems something went wrong with the data in the worksheet that I have. So trying to piece it back together this morning. Intraday, we have a bearish bias for today. And that just says that today we just have to close below 441.95 in order for today to be bearish. One of the things to keep up with, and this is where I'm having difficulties or technical difficulties with the sheet, is that I have a retracement target for about 432 on today. Now, this is what the sheet has, but when I went back to verify, it seems as though it could possibly be the 441 area, which doesn't seem right either. But I'm going to go with the retracement target of 432 on today. For the week, we have a retracement target of 431, of the 431 area. So this is where we would look to retrace, and this is kind of that decision area where if everything's going as planned, we would see a reversal sometime after that 431 area. But bringing back to mind, from what I see, just a little longer term, based on the weekly trying to retract a bit, it's possible that we could be in a big consolidation mode for the next month while the weekly kind of repairs itself and rests. So be prepared for that. And as always, know and define your risk, and profit will come. Wishing you a successful trading day. Have a great one.